days to get a link.
I agree.
I give you the link tonight. On time.
Nice. Yes, Steve.
Ladies and gentlemen, welcome to the Fintech Friday show, where there will be probably a little bit too much SoFi commentary this time around because there's some very big news, and I don't really know the opinions of many others in this cast. And Roy, I think I just got a DM. We're having another person join us. Is that correct?
Yes, that's correct.
Okay. Is it going to be? Did you say it was going to be late or something? What's happening?
He's having technical issues.
Oh, okay.
Yeah.
Okay. All right. So we'll have another guest join us in a few minutes.
I mean, all you have to do is read the thread. Just saying.
Well, I'm too busy hosting and going to introduce my beautiful co-host here.
Beautiful.
You're looking pretty shab. No?
Beautiful. All right.
You're gonna get sip of my ego going now.
My glass.
He's gonna go out afterwards. He's gonna be like, you know what? I'm beautiful. I'm not freaking doing the after hours. I'm going out.
I haven't been called beautiful by Tanner ever. So.
Oh, come on! Don't start spreading lies now. I mean, I always send you a little reminder text from time to time.
Well, now I'm never shaving this mustache. I hope you know.
All right. Now it's starting to get a little weird. Let's get into the finance stuff.
Ladies and gentlemen, welcome.
Uncomfortable.
Steve's a little old school New York. He's like, whoa, I don't want to be a part of this. Welcome, everyone, to the Fintech Friday show. Along with us is some pretty funny, but also very educated, especially on some of these fintech names, co-hosts of mine like Roy Crossroads, Tevis from the Fundamentals of Investing podcast YouTube channel, and the great and powerful Steven Fiorillo, aka Dividend Streams. How you guys doing?
Doing well. Another excited to be here. Sorry that I missed last Friday, but glad you guys went right along without me, without a hitch. So awesome to be here, though. Feels like longer than 2 weeks, honestly, when I miss a week. So,
Tevis,
doing good, man. Yeah.
Nice. Steven?
Tevis needs to get that Celsius going. He's about to pass out.
I know.
We got Tevis about to pass out. We got Tanner drinking coffee out of a damn glass.
I got coffee.
What the hell's going on here?
I got coffee in a cup, so we're fine.
And Roy's smashing a Monster.
That's right. Yeah.
And Roy's drinking a Celsius.
Monster.
Oh, Monster.
Yeah.
Forgive me.
I don't think he doesn't like the Celsiuses.
They're okay. They're not bad. Like if somebody's like, "Hey, you want a Celsius?" My answer would be yes. If it's on the shelf and I'm like Monster or Celsius, like why would I do Celsius?
I think I've gotten breakfast with you before, Roy, and you've gotten a Monster.
That's right.
Yeah. He likes the Monster over the Celsiuses for sure.
That is concerning. Breakfast Monsters.
There he is.
Hey, guys.
Hey, Chris.
Hey, Chris.
With us today is the great and powerful data-driven investing, which is such an amazing surprise on quite an important stream. We are here to talk about SoFi dilution.
White Boy Weekly is live.
I am going to kill Chris for starting that. Not this Chris, but the other Chris, because this is forever going to be known other than us as that.
Did I tune into an episode of Brokeback Mountain? No, this is an investing podcast. We're just having a little bit of fun. Chris, what the heck went on? Can you give us the facts of the deal here? No, I don't think he is. His connection is
he's having technical difficulties.
Roy, can you give us the details of what the heck went on yesterday?
Yeah, so it's kind of a repeat, although very different circumstances of the previous equity raise that they had back in June or July, one day right after the most beautiful earnings that they posted before they announced that they were going to do a common stock offering, and of course using same partners, Goldman Sachs, to the tune of $1.5 billion with a 15% possibility upsize that, which pretty much always happens. So they did that. Of course, there's a lower stock level. This time, same thing. There is some different verbiage on the SEC filing as far as like what it's for specifically. It ties into some of the language that Chris Lapointe had at the fireside chat literally the day before. Although it's kind of interesting because of the timing and some of the comments that they said during the fireside chat as well. So yeah, it's a little bit surprising. I think we talked about this before, that if they were going to do this, we wouldn't have been surprised like right after earnings like before as a one last time, just because they wouldn't want to hinder themselves from getting the 35 or 45 PSUs. But yeah, it's interesting.
Tevis, is this net bullish? Is this negative? How are you thinking about this? I mean, complete shocker, right? Like no one saw this coming. I think we can say that across the board. No one expected this.
Yeah, I think there's two paths with this discussion. First and foremost is what are they going to use the money for? Because they're well capitalized as it stands, even without this latest raise, given the fact that they raised in very recently after the last earnings. And then the other question is, what is going on with these comms, dude? Because they, in their, I think it was 10Q, had it very clearly highlighted. Actually, I have it up because I just finished making a video about this. If you can share my screen, Tanner. So just read this right here. We believe our existing liquidity will be sufficient to meet our existing working capital and capital expenditures needs, as well as our planned growth for at least the next 12 months. So,
sorry, go ahead. You're good.
So basically, this was from their, let me scroll up. This was from their 10Q for the period that wrapped up end of September. So they're basically saying, hey, we have enough money. We don't need to raise more money. And then yesterday, or on Wednesday, when the host asked Chris Lapointe, what are you guys going to be doing? Because your capital ratios are high. And he said, hey, we're well capitalized. And we don't really see anything. Like, he didn't lead anybody to believe that they were going to dilute further. And then she asked again around mergers and acquisitions. And he's like, there's nothing that we have on the radar right now. We're going to be opportunistic, but there's nothing really that they're eyeing specifically. And then 24 hours later, they go ahead and they announce the 1.5 billion. And so I'm sure I've been holding SoFi long enough to trust management to make the right decision for shareholders, because management is aligned with shareholders in terms of their PSUs. So they're more incentivized, just as incentivized, but even more so because they hold way more shares than any of us, to get the shares to 35 and 45 bucks by June of 26. So I get that. And I'm sure they have a good use case. I just don't love this idea of them saying something and then doing something different, because that's going to run out real quick from a trust perspective.
Yeah.
Yeah,
Steven?
it's actually somewhat
sorry.
similar to the last time as well. They made similar comments around being well capitalized, and then they immediately did the equity raise too. So it's not dishonest, but it does rub I think pretty much everybody a little bit the wrong way. Not so it's kind of like just saying yeah, I got all the money I need. I don't need extra money, and then you see $200 laying on the street. Since anybody's, no, you take it. Okay, you pick it up. But it takes a little bit longer than that. You don't just happen to find $1.5 billion opportunity for selling your shares at the market. So they didn't have to. They're not capital constrained or anything like that. They saw an opportunity, and it would have been, I think, better if they had couched that, as far as like, we're not needing to raise for anything, but if we see an opportunity out there, we will be raising, and you'll see that. And then you see it the next day. It's like, oh, okay.
Or at least tell us the reasons. Like, hey, we don't need, here's a press release. Let me rewrite it for you guys. we don't need to raise any money. This extra 1.5 billion is opportunistic. Here's what it's going to be used for: debt repayment. We're pursuing an acquisition. We can't really disclose anything more right now, but there's a couple of targets we have, eyeing up. Whatever other, we're going to expand the loan platform business. We're going to go into business banking. We're going to, reinvest into the core engine of our tech platform, whatever the case may be. It's like general corporate purposes. Like, what the hell does that mean, guys? Like, what are the general corporate purposes that you can't fulfill with your existing financial strength that you need an extra 1.5 billion for?
Yeah, I am curious if it's something that's just across the board that they see an opportunity. So what I was sort of thinking is, what if they see an opportunity not just to grow into student loans or home loans or something, but they are actually just booming so fast on personal loans, home loans, student loans, pay off the $2 billion of warehouse facilities, which is an extra $100 million to the bottom line. Like, what if it's just across the board, an opportunity, and they just needed a little bit of extra powder going into 2026?
I think that's it.
And all that powder going into before they're about to show a guidance, right? Like at the end of 2025, they show guidance now. I'm happy they didn't do guidance and then a raise, because then we know, it's playbook as always. They're going to lowball us and everything. But a raise before guidance is like, okay, well, what are they going to do now? Because they have a lot of extra money to accelerate growth.
Yeah,
Chris, you're playing the camera game with me right now. I'm what's going on,
Probably
buddy?
trying to get more bandwidth.
he needs to get another of his kids.
I'm gonna move rooms. I'll be back. Because
Okay.
my Wi-Fi is just failing miserably.
Yeah, the audio is good though. I can hear you.
I mean, look, I think here's the thing that so I've already talked about the communication point. I think the thing that doesn't make me as pissed about this is, again, the incentive structures are aligned with shareholders, that if you dilute shareholders by 4%, it better be for a reason that you believe the ROI is going to be well in excess of that 4% that you're diluting by. Because otherwise, why are you doing it's not from a position of desperation. It's from a position of strength to accelerate the growth. And if it is an acquisition, which I don't necessarily think that it will be, but maybe, if it is an acquisition, I mean, they have to have the funds secured before they announce anything. So they can't really say anything until a deal were to close, if they're in talks with a company, for example.
So why didn't they just do a stock deal in that case? Why did they raise before and not just say, hey, we'll do, if the acquisition's $2 billion, they needed to raise for that. Okay, we'll do $500 million in cash, 75% in a stock deal, and raise at the time of the deal.
It's not an acquisition. Like the wording at the very end of that fireside chat was, there's nothing imminent at this point, but we have a ton of optionality. And that's exactly what.
But what we're going to take their word for it? Like, their word hasn't meant anything.
I mean, that's troubling in and of itself, honestly, whether it's to the good or to the bad. But no, when they say there's nothing imminent at this point in time, like, honestly, that would concern me more with this equity raise. I like this one better than the previous one. The previous one I was moderately opposed to. This time I'm moderately in favor of, although it is a couple of interesting things with it. But in this case,
what's the change there?
Timing, basically.
Okay.
So anyway, if we look here, this is one of those things where we talked about optionality. And so I think it's probably for lending more than anything, but probably a combination thereof, like you said. But as far as a merger and acquisition, if it is for that, it's probably further off, just because he said there's nothing imminent at this point. If they had actually instead did this equity raise just like this, and then we found out like today it's also for a merger and acquisition, that's when I'd be like, okay, nothing imminent. And then 2 days later, you would say, well, we're actually doing a merger and acquisition. Imminent is within 48 hours. So yeah, but I mean, I expect maybe next year at the earliest.
Following that same logic, Roy, I would even go so far as to say they're more likely to do an acquisition because they said nothing imminent, just going off the track record.
Yeah.
It's like whatever. It's like opposite day over there. You know, whatever we say we're not doing, we're doing, and whatever we say we're doing, we're not doing.
No,
yeah. But yeah, as far as like the loan opportunity, like they talked about that with this home loans, student loans, and then they're turning down $100 billion of personal loans each year. And then Crystal Point, like even mentioned there specifically, like the goal that wasn't just to shift everything over to the loan platform business, but instead he talked about getting 5, 10, even 15% of that, which you need capital for that. So I think it's just lending that they see that there's such a great lending opportunity and lending environment. And some other things too. Like this is, a lot of money. It's, end up being over $1.7 billion.
But if you run the numbers on the last two raises, the 3.4 billion that they're going to be raising, because I don't think it's 1.5, I think it's 1.7. Like the 15% always gets taken.
Yes.
So that's going to happen twice. Well, already did happen once. It's going to happen a second time. Essentially, the quick math on how much money that they can raise on that is roughly about 9 to 9.5 times that amount of dollars. And that's on really risky dollars, not even speaking of like home loans and secured loans, which can actually go a little bit further. But essentially, that means that they could raise their loan book from $33 billion to roughly $65 billion after just these two raises. That's doubling their loan portfolio. Like, they have a lot of dry powder. A lot. Way more than people think. People think, oh, okay, well, the originations, they're originating $7 billion a quarter. Like, what's an additional $1.5 billion? It's the leverage on top of that. $1.5 billion allows us to lend out like $16 billion. Like, it's a lot of money. So, and then that also doesn't include, repayment of the loans. What's it called? Sorry, repayment. The amount of additional money that you're going to be making from the interest, the amount of loans that you end up selling. Like, things can change very quickly.
Tanner, let me ask you this.
Yeah.
Q2, we get a triple beat, and what happens 5 hours later, 6 hours later?
We go up?
No, we get a huge equity raise, right?
You're talking about last Q2.
Sorry, yes.
Okay. And everybody was freaking out, right?
Yes.
What happens in Q3?
We beat and raised.
Exactly.
You've done that regardless.
But
it was a huge beat and raise.
No, but it was a huge beat and raise, and this happened in Q2 because after they released a triple beat, within 6-7 hours, they also did the same thing and raised capital. People freaked out, stock went down, and it's the same thing all over again. If we're not going to trust Noto and Crystal Point, we shouldn't be in the stock. Mm-hmm. And this is a situation where we have no idea what they're going to do. And it doesn't matter what they're going to do because they're playing it close to the vest. Maybe they're going to invest in more loans because they're expecting the Fed just to cut rates, and then the back half of 2026 sell them because as rates go down, those loans will gain value because they have a higher coupon on them. Maybe they're looking at acquisition. Whatever they're doing, they haven't steered shareholders wrong. And if this freaks people out, you're probably up a great deal. Maybe this isn't the company for you. But for me, I could care less what they're doing with the money because this is what I signed up for. And I'm much happier them doing an equity raise at these prices because it's actually less dilution than if they waited till the stock falls for some reason and they need to do it. Do it now. It's less dilution, and it's better than tapping the debt markets, having to pay interest and pay the debt back. Shares are near all-time highs. You're going to do an equity raise, do it now, and let's see what they do with it. I am sure that this is going to be fine, just like it has been every other time.
Chris?
Just my 2 cents.
Chris, what are your original thoughts?
All right. So hopefully my Wi-Fi lets me participate in the conversation now. So I think generally, so I trust management, right? Like first and foremost, kind of what
Chris?
Steve's saying, right? They've been really good.
Okay, I can't wait. Hey, Chris.
I've like
you
moved 3 rooms. I've done all kinds of stuff.
One more room.
There's never been
Try
a
another
problem
room.
before. Try one more room. I'll go in with my sleeping 6-year-old. Maybe the
Chris,
Wi-Fi is
just
better
log
in
in
his
from your
room.
cell phone.
Yeah. Hotspot from your cell phone.
Yeah, jump into Tesla.
Yeah, I'll probably just do it from my cell phone. Yeah, I'll be back in a minute on my
All right,
phone.
nicest guy. That's who.
Can we get this guy Starlink or something?
Actually, though, once he does switch over to his phone, it will be perfect.
I'm sure it will be.
Sorry, someone said in the chat here. Thanks, Joey, for the membership. But he said, "What would you prefer is the reason for the raise?" And I think that's a really good question as well. And what would disappoint you? You know what's funny, and this might surprise you guys. I would actually prefer if they didn't do an acquisition. Acquisitions are not always the right decision. You can pay a lot for them. Maybe it's not a great buy. Maybe it doesn't fit well into the company. It's always a risk, right? Them just having more loans and continuing to do the thing that's worked constantly is a foolproof system. So for me, I would actually just like it for general corporate purposes of growing more, paying off debt, and essentially just speeding up the company. Take those growth rates from 35%, bring them to 45%. Let's see if we can do that. That, I think, is a foolproof system. But what do you think, Roy?
Yeah, a small acquisition I think would be fine, but if it's a large scale acquisition, my assessment is like with Technisys and Galileo, right acquisition targets, very accretive to the business, but it seems like that those are digested quite slowly relative to what other businesses do. Now, there's a lot to digest, a lot to move over as well, but I don't know if it's just like, hey, this is a one-off as far as like these two acquisitions, they came over where it's going to take that long and take that long to digest. But there's also businesses as well, and I own some of those, where they just don't do acquisitions that well. It can still be a good tool, but if that's their whole modus operandi, then they have a mistake just because they don't integrate them well. It takes a long time for them to move over and really fit it into the ecosystem as well. And in the back of my mind, I think SoFi might be one of those. It doesn't mean SoFi is a bad investment. It just means if much of their strategy is revolving around mergers and acquisitions, then that's not the best.
Tevis, what is your preferred reason for the spend?
Whatever makes them grow faster. I don't necessarily
cop out.
No,
Give me an answer.
Like
lending. Then
I'm here to make money at the end of the day, man. If it's like I'm not a stickler for how they're going to be making the money, whether it's through an acquisition, if they feel that they have better ROI there versus the loan. I did feel and we can pivot on that. But what LaPointe was saying on Wednesday, there are some significant nuggets there. So one of the things that stuck in my head was the 400 billion student loan TAM that's within their credit box. And he said every 50 bips that it falls, that increases by 25%. So 50 bips of the rates falling would increase it to 600 billion total just market for student loans in their credit box. And then the fact that they're originating 1.7, 1.8 billion per quarter, and they're rejecting 100 billion per year. So 25 billion, let's just say, for the sake of argument, they're rejecting a quarter in personal loans. Like the optionality that they have with regards to loan platform business acceleration is off the charts. And if this money is going to help them get there, by all means, dilute even more because you're going to grow even faster. Just give me a heads up at least, so I'm not, over here in the dark and just have this blind faith. I just, that's all I'm asking for.
What's funny is some people have said, they should acquire Chime or something like this. They can't afford any of those businesses, but Upstart is actually kind of in their price range now. And that didn't used to be that way. It used to be Upstart could have bought SoFi. Boy, how the tables have turned. But Chris, welcome back. You look amazing.
Thanks.
Streaming from the closet, or I guess out of the closet.
I'm actually in my daughter's room right now.
Well, she has the best Wi-Fi.
Yeah, apparently. Well, yeah, I actually turned off Wi-Fi. I'm on 5G now because Wi-Fi failed me so many times.
How you doing? Tell us about what's going on. What are your original thoughts?
All right. So I actually have a bigger announcement to make, generally speaking. So this is the first time that anybody, I guess, outside of a select few are hearing this. This is going to be my last time ever on this stream on FinTech Fridays. And the reason why is because I've accepted an offer to work for SoFi.
Wow.
No, you haven't, have you?
Yes, I have.
Congratulations. That's great.
Bro,
That's huge.
Good
What?
for you.
what's the
That's
position?
crazy, Chris. Congrats.
So it's the official title is Senior Manager in the Office of the CFO.
Of course that happened.
I knew you were buddies with him.
And actually, so I'm not, but the last time, well, I guess we'll get into it. But I wouldn't say that I was buddies with Crystal Point.
I hope
But
he only
I
hires
hope to
Chris.
become
I hope
so.
it's a full
Yeah.
office of Chris's.
That's awesome.
That's great.
So anyway, I meant to get on here on time so that we could chat about stuff.
I guess all that analysis that you put on X really paid off.
Yeah, I guess so. I didn't plan on this happening, right? So I guess anybody who's been following, I've worked at the same company since I graduated college. It's been like 15 years. We got acquired at the end of 2020. There's been some crap that's hit the fan over the last, call it, last year and a half to 2 years, but especially the last 6 months. And I actually on a whim on one of the crappy days, I reached out to Noto via DM and I was like, hey, I might move jobs. And this was over the summer. And so he was like, well, I'll forward your information to some people and we'll see if anybody's interested. And then I had a quick chat with Crystal Point back then. And then for, several months, nothing happened. And then kind of after the last quarterly earnings, it kind of came together pretty darn quick. So yeah, I start on a week from Monday.
So does that
I just
mean
accepted the offer this week. So I think what really happened is that they had to raise the capital because they hired me.
So or does that mean you're moving?
No, and that was a joke, you guys. Also, I have absolutely no insider information whatsoever, like on anything. I know absolutely nothing. No, I'm not moving. So they actually have an office in Salt Lake City area. So I'll commute up there.
Nice.
It's about 40-minute drive.
Oh, that's not bad.
Yeah, not bad at all.
Yeah.
That's
So
amazing.
he, I guess, won't be a part of this podcast anymore, but he will be on the SoFi Weekly after hour. No, I'm kidding.
Well, I mean, you can still be on this podcast. You just can't talk about SoFi.
I'm pretty
I
sure
just
they told
can't
me
say-
to get me on it.
So I actually, and this is something, so I'll make this announcement on X and stuff too. But they asked me to wind down DDI entirely, at least for the foreseeable future. So I will no longer be the DDI that everybody knows and loves, but instead I'll be trying to do my best to create shareholder value for the actual company. So
That's
All
so
right.
honestly, that makes me really have like an emotional connection to the stock because I think that you're going to do great things. That's very exciting. I'm really happy to be holding a company that you're a part of.
I guess I really can't sell my shares now.
Yeah.
hey, you can do whatever you want, man. Like you don't have to marry a stock for me. But yeah, I'll do. I promise to do right by everybody. But no, you don't. Steve, if you feel like you got to sell your shares, you go ahead.
No,
and sell
I'm
your
back.
shares.
I'm back. I was back in after Q3 earnings, both feet. Everybody knows that.
That's
Just-
true.
Remember your roots, your retail. put in some good words for us there.
Yeah, give
So-
us some hurts.
I was hoping your job title would be like head of the PR department or something.
That would be amazing.
I actually have. So one of the things that they talked about is that I might be involved in is like retail investor outreach and stuff. So that would be good. Again,
Oh, perfect.
I won't know
So
what
you
my
can tell
my day-to-day
Noto-
works looks like. Sorry, what, Steve?
Yeah, so that's perfect. So you can tell Noto to stop, the behind the scenes stuff with everybody and just come on the show.
Yeah, I'm sure he's going to listen to me and take my advice.
Just day one, Chris, assert dominance. You got to walk in there and be like, this is what you need to do.
You need
Be
to
like,
be the
no,
big
no.
Chris in the room.
Freaking Brad goes on everybody's thing. You got to get out there.
You can't go in day one, Tevis. You know this. You gotta know the lay of the land, figure out the culture, figure out how people work, and then like 6 months in is when you go in and you put your foot down.
I
Immediately,
mean,
the second you get in there, just like prison rules, you got to go punch the biggest Chris. You need to be the biggest Chris in the room at all times.
No, that's not me. I don't know if you've ever spoken to me before, but that's not really my style.
Well, dude, that's awesome. But DDI is winding down. Jeez. Can I buy the X account off you or what? What's going on?
Oh, you just want to take it over? No, I'll change it to my profile picture. I'll start posting stuff about politics left and right. It's going to be great. I'm just kidding. It's not. I might actually change the profile to my picture. I mean, I'll still be on X and stuff, but I just won't talk about, obviously I won't talk about SoFi, and I won't be talking about other individual equities or anything. I'll be lurking for sure.
What you can do is do TA on crypto, just like full time.
Oh, yeah.
Yeah.
Chris, in all seriousness, you got to convince them to do a freaking investor day once a year.
I mean, you don't have to sell me on that. I'm all for that idea.
So you'll still be covering Duolingo and those sort of stocks. Like I guess you have no.
I don't think he's going to be able to.
No, they for now, for the time being, I'm not going to be covering anything at all. At least no individual equity names.
Got you. I guess Tevis is right. Then you got to go full crypto.
Yeah, that's the only. Yeah, because that there's nothing wrong with that. It was actually Roy. Plus TA, as
right.
everyone knows, is my greatest strength, and so I'll do a great job there.
This is a great question. What was the interview process? Oh, convenient freeze. Very convenient.
Are you kidding me? You got to be kidding me.
No, you're back.
Okay, I'm back. So,
oh man,
I know it was different for me than it was for normal people, because what happened?
You're gonna have to start over.
Okay. I said I know that the interview process was different for me than it is for like their normal candidates, right?
Yeah.
Because
you knew
most
the
of the
CFO
people, because I've talked with Chris LaPointe before, right? Obviously, a lot of people at SoFi are aware of the 5 people who are on this podcast right now, and so it was actually kind of a whirlwind. So once things kind of opened up, like he had me talk to 3 different. So I talked to the head of investor relations, and I talked to 2 other people kind of in the finance team, and they were more of like kind of get to know you questions rather than like your standard job interview isn't just like people don't already know you ahead of time, whereas they did here. And so it was pretty quick. I just kind of got to know the team and specifically the people that I'd be working with, so that they kind of had input on, I assume, whether or not SoFi should hire me. But yeah, there were I guess there were 3 in quick succession, and then I had 1 more later, and then I spoke, to Chris once or twice through the process too. That was more of a, I guess neither of those were really interviews per se. But it was, so a lot of the questions that I did ask was about the culture. And I think that, I'm sure they'd be fine with me talking about this, but everyone was really, really effusive about the culture there and the emphasis on like innovation and just the momentum that they're seeing in the business and the excitement that's kind of just permeated through most of the through the team and through the different aspects of the business, and how they really feel like this is like, I don't know, all of them were just really excited for the future. Like you could just feel it when you were talking to them. So that was pretty cool.
Very cool.
Am I the only one who can't hear Tanner?
I can't hear him either.
I thought you guys
Tanner,
could.
Sorry about that. My bad.
You're good.
I was saying, you start Monday. What do
Not
you?
this Monday, a week from Monday. So like in, I don't know, what is it, 9 days?
Are you able to talk about the dilution process at all, or?
So I don't, first of all, I don't know anything, right? So
No, of
I
course.
know
Just your personal opinion.
absolutely nothing. No,
Let's not
I
put him
actually,
on the
so
spot.
before I got on, I was like, hey, I'm probably, because I mean, they told me that I needed to wind down DDI. And so I was like, it'd probably be a good idea for me to get on and just say that. And so I did, but I actually, that one I did text about, and was asked not to share anything else about SoFi after making the announcement. So,
Okay.
so no.
All right. Well, thanks so much, Chris, for having you. And bye. No,
See you later. I'm out.
Dude, that
Well,
is
I'm
incredible.
pretty sure that all of us think you're going to do a great job there, and we are very happy for you. And the fact that you're going to be working there is bullish for us.
Yeah.
So, really happy about that. Especially, I'm sure, Chris, did they say this to you? The fact that Chamath said that your analysis was great on SoFi, that just like solidified it for them.
No, they didn't say it. I mean, Jim Moff didn't come up at all and never has.
How much are you making? Are you allowed to talk about any? Not the money, but like.
Can we not ask him these questions? Why are you trying to get him in trouble?
Are there SoFi
Man,
shares
I
involved?
just accepted the offer. You're trying to get him to rescind the offer already?
Yeah,
Are there SoFi shares involved?
Chris,
What,
you should just leave. Just don't answer anything. Just leave. Don't let these guys get you in trouble.
No, it's fine. What was the question, Tanner?
Is stock-based compensation a part of your thing? Are you affecting the stock-based compensation going higher or lower?
I am affecting it going higher, right? Well, I love SoFi stock, guys. You really think I would have accepted an offer that didn't have RSUs? Really?
There you go.
Plus, you're going to buy it anyway, so might as
Yeah,
well get it.
It's either I take RSUs or I just buy it outright with the money that I get. So,
Yeah. No, you can expect the same line of questioning whenever he's never going to come on.
The questions you're asking him, Noto's never coming on now.
I mean, Noto makes it public, so
yeah, I already know he makes we already know how much he has in the company.
I think the thing that I would be most curious about, and Chris, don't react to this, but like, so winding down DDI is one thing. I wonder if there was like, here's how you can interact with the retail community type of thing, because I would imagine that's like one of their concerns, is because you're a guest on all these podcasts so frequently, and obviously you're a voice in the retail community, and I would imagine like that, like if it was me hiring, that would be probably a fear, is like, okay, well, you have a back channel or X back channel, right?
I mean, I'm sure we'll talk more about it once I'm actually working there, right? But thus far, they haven't said anything.
Yeah. So you're working in the
office of the CFO.
Office of the CFO. Got you. Wow.
So you're going to be working directly with LaPointe on a daily, or?
I don't know if it'll be daily, but yeah, I'll be like a kind of a part of his team. And so kind of the job description, which I'm sure is fine to share, is a lot of the things that I'll be doing is preparing things for investor conferences, preparing things for the board, chasing down things that he himself doesn't personally have time to do. They also talked about, doing retail investor outreach, stuff like that. So kind of, I guess, how I think of it is just an extension of all the things that he wants to get done, but doesn't necessarily have the time to be able to invest himself, are the things that I'll be working on.
I was literally just thinking this.
Yeah, there we go. That's right.
I know for a fact Chris is doing the important work, but if I said I was working under the CFO, I'd be getting coffee for sure. I would be running for coffees and bagels. But no, Chris is actually smart and will be helping them. Do you have any do you think your past experience affects this work in this job, or how does that work?
So I guess for those who don't know, I'm a chemical engineer by training, and I've worked as a like a process engineer for the last, call it 15 years, at a kind of small startup, and then we ended up getting acquired. I think that there's so I think the things that I'm generally good at is first principles thinking more than anything else. And that first principles thinking is something that applies across a lot of different disciplines, and that isn't necessarily like, obviously, right, I've got the experience when it comes to, the chemical engineering stuff that I don't have in finance. And so there's going to be a huge learning curve, which actually I think is part of the reason that I wanted to do this, is because I feel like I'm going to learn a ton and grow a lot as a person. And that hopefully I'll be able to, and then obviously that I think that I can provide a lot of value to SoFi as well. So does that make sense? Like none of it's going to directly applicable, but I think a lot of the
it's all transferable.
A lot of the learnings are transferable. Yeah.
I think your sheer knowledge about the business as well is just something that's pretty interesting. Not many companies hire people onto the business that know everything about the company. You're not even immediately like needing any training. You'll be doing the training.
Well, I'll be needing the training on all the finance and day-to-day stuff, I think. But yeah.
Yeah.
You're going to be like a celebrity when you walk in there because everybody already knows you. It's crazy.
I don't know if I'd go with celebrity. I guess we'll see. I doubt it. I don't think I'll be a celebrity. I don't want to be a celebrity, that's for sure.
Guys, I just said bagel. I don't even understand. Everyone.
Because you're not saying it correctly. Jesus.
Bagel.
There you
That
go.
famous Y in the bagel name.
You're pronouncing bagel wrong. You're drinking coffee out of a freaking glass. I mean, you're probably the worst person to go to breakfast with.
I mean, that's probably not wrong. I don't know. But
I feel like Steve would, if he was going to rate you, he'd rate you 3 stars and say, great friend, upstanding guy, brilliant mind, terrible to go to breakfast with, 3 stars.
Terrible. Probably doesn't even use syrup on the pancakes.
Maybe.
okay, so can we talk about the dilution in your presence, Chris?
Sure.
Or do we
I'll
all
just
have
turn
to
off
be-
my camera and mute my audio. No, I know nothing. I know absolutely nothing. So you guys are welcome to talk all you want, and
Do
I'll
we
just
have to
listen.
unfriend you?
Well, hold on. You haven't started yet. You can still have an opinion on the
No,
dilution until next
No,
Monday.
you can't.
No, they told me.
not
I was told not to talk about SoFi
Guys,
anymore after making the announcement,
do
so I'm not
not
going to.
Actually, recommend you
Well, I'm
leave.
glad you started with the announcement then, Chris. You couldn't have kept that till the end after your, give your opinion and then the announcement.
Yeah, I would suggest, Chris, that you might want to leave just in case.
I would suggest, Chris, you leave now. They're not going to stop.
Don't bully him off stage.
Oh, I'm trying to make sure his career actually goes past tonight.
Steve, you know me well enough. I'm not going to just bite.
I know, but
Yep. Head out, man. Say goodbye. Take a bow. We love you. I just don't want you to, jeopardize anything that is happening at SoFi, and like, oh, Chris, why did you nod your head when, so.
You're no
Yeah,
longer.
All right. I'm no longer welcome here. I can feel it.
No, it's not that you're not welcome here, but there's just zero upside.
All these corporate SoFi
It's only
people
rich.
want to be on this pod.
You have a
Yeah, you
sort of
guys are constantly asking for SoFi people to be on the pod, and here you have one.
get off.
You're just kicking him to the curb.
Yeah, one that hasn't even started yet.
Yeah, one that hasn't even started yet and has no knowledge of anything.
That's so funny. Well, hope your Wi-Fi freezes. I'll see you later.
Yeah,
All right.
congrats. That's great
Chris.
news. Congrats, Chris.
That was.
I'll pop back in for a second. Thanks. We'll talk to you later.
See ya. Well, there you have it, guys. A genuine SoFi employee on the podcast.
I think that was our first.
We finally got one.
First and last.
Oh my gosh, that's really, really good for him.
I wasn't expecting that news.
Yeah, I wasn't either.
I'm I'm a little optimistic that he sort of gets in the ears of the CFO to be like, hey, you know what? It might be good if we go public with this news or something like this, and try to do more press releases on interesting partnerships. That I'm really hopeful for.
I mean, if he can get them to not act, but be as transparent as Vlad, that'll be a huge win. That is all we can ask for this.
Yeah, for anyone that just joined, Chris Hager, or Data Driven Investing, but name's Chris Hager, just came on the podcast to say that he has quit his job and accepted an offer at SoFi Technologies. So he's no longer allowed to speak about SoFi. His X and stuff will essentially be winding down. I guess it's just going to be for his own personal content now, but he can no longer talk about SoFi because he's going to be making an actual impact at the company. And I don't know if you guys know this, but you see it come through on his Substack, and you see it come through on his X, and in your personal conversations with him. He is a brilliant dude. Someone in the retail community that it's even weird to call him a retail investor. Like, he doesn't act, seem, or think like a retail investor. It's very exciting to know that the company that I'm investing with will benefit from any of his work.
And the great thing too is it's not just that he is brilliant, because he is. Also, he is a very high character guy, just like above and beyond reproach, give the shirt off of his back type of person. And I want my companies to be run by people like that. So yeah, really like this. Excited for Chris. Excited for SoFi too. So
yeah. It is interesting, and I didn't mean to make the questions weird, but if I know if Chris can't answer them, then he's just not going to say a thing. So, comedy show, little entertainment, but yeah. Back to dilution. Unless, also, actually, can we step off of SoFi really quick? Because I just thought of something. Well, actually, it involves SoFi a little bit. There was a Reddit post on if SoFi was going to add prediction markets. And SoFi said that we are not ready to talk about the timing of if or when we're going to get into prediction markets. But it definitely seemed like it wasn't a matter of, it seemed like a matter of when, not if, I should say.
Yeah. That's interesting. I didn't catch that before.
Here, I can. If you haven't seen it, then let me bring it up, because I won't give you my wording. We can read the actual wording here.
Yeah, I'm curious how closely it resembles what's already out there. It seems kind of antithetical to getting SoFi's money right. I know there's a lot of people that are very pro SoFi and anti Robinhood because they see it as degenerate gambling and predictions market. They don't like that. So,
said. We've evaluated prediction markets and see some potential in how they could help people engage with events that impact their money. It's an interesting space, but we can't share a timeline at this stage.
That's interesting. Yeah. And it could be that they don't do the sports side at all. They just do the other, which, there is.
Yeah.
I know people joke and push back about it, but there is a legitimate hedging opportunity with some of these predictions market opportunities. So,
with that as well, I was going to ask, did you guys see the announcement of the Robinhood prediction markets event, and what you think that means for the future of fintech, if that's something that you guys are excited to engage with at all? Tevis,
yeah.
I'll start with the biggest degen of the crowd.
I didn't see it. I didn't. I saw Kalshi and CNN, and I saw Polymarket just launched in the USA. I didn't see anything around Robinhood specifically, maybe, unless this was last week.
This was 4 days ago.
Was this the vertical integration thing that we were talking about on the bootleg?
It was just that they're announcing a full event the way that they've announced.
I didn't see this.
Yeah, so this is initially they talked about 3 events, maybe doing a 4th. This is the 4th, an AI and predictions market event. So, innovations and predictions market. I think it's just fully online. I don't believe it's all remote and everything. So yeah, it'll be interesting. By the way, if I can mention this, I have an interview dropping tomorrow. I asked somebody that is an analyst in the space what they thought about this specific question. Also, a lot of SoFi related stuff too that'll come out probably around noon tomorrow.
Nice. Bro, if there's any Robinhood event that I'm most likely to be invited to, I hope it's the prediction market one, because that's like most in line with my degen nature. Everything else is like, I don't really think I could add value there.
This one's just a webinar. They're not doing anything in person. The one most likely to get invited to, they're not even inviting it.
Like, they better have it in Vegas, and
Oh, that would have been fun.
yeah.
They should actually just invite Tevis to this and call it a day.
Woo!
It's just me gambling on the webinar, just a live stream.
Yeah.
The one Canadian that doesn't have access to the product. But so I guess there's not too many thoughts on that. What about S&P 500 exclusion for SoFi? We didn't get in today.
Dude, what were those inclusions?
The fact that a car vending machine got into the S&P 500 is insane. And I ended up streaming
It's not that
longer than I
crazy.
thought I was going to. I went through the S&P 500 list. When you look through the bottom 200 companies, there are so many companies I would never even think about owning. And I own a lot of different freaking companies that I'm actually shocked Chenier and SoFi did not get in. Like, this is insane. It's insane.
Yeah.
So there is a lot of misconception. And honestly, Roy led me to a lot of this because I thought Carvana was a dying business. Until you actually take a look at the numbers, this is the opposite of dying. So there was a while where they got really hyped up and then growth rates started to decline and then started getting into like negative growth territory. But if we zoom into like the most recent last couple of years, we have just accelerated and accelerated and accelerated growth. Now the most recent quarter growing 54% year over year. And next quarter is going to be a heck of a lot higher. So profitable, fast growing, coming out of a ditch. And what's the market cap on this name? $56.4 billion. So I don't think that the Carvana name is the one that we should be pointing fingers at, but I am happy that a lot of names got rebalanced. It's definitely good that a lot of the names that might have been ahead of SoFi got out of the way.
Yeah. Yeah, it's. I would guess like I would have been really surprised if it got in. Not that they don't deserve it, but there's a lot of deserving names, and there's always some that I don't even have on the radar. And 2 of the 3 today were ones that I didn't have on the radar at all. So I think it's extremely likely SoFi gets in next year, like maybe quarter 2, quarter 3. But yeah, if they added nobody at all, I would have been pretty surprised.
Sorry, $86 billion, nearly $87 billion. I was looking at the float market cap. My bad.
Yeah, Vertiv was who I thought really would have gotten in. Lunar mentioned that. That's probably in, I would guess, next time. But,
I mean, the fact that SMCI is in, you would have thought Vertiv would have got in.
yeah, it should have been in several quarters ago, but
Just,
yeah, we'll be saying the same thing. If this persists for SoFi for another quarter or two, like, why do they hate SoFi? What's going on? And S&P 500 will do this, that there will be a very deserving company that checks all the right boxes, makes perfect sense, and gets snubbed for 2, 3, 4, 5 quarters. But almost always, I think, honestly, unless something changes in the business, it gets in. So if our bull thesis was banking on the S&P 500 inclusion, and that's it for SoFi, it'd be really weak. But the nice thing is just free upside at some point.
Also, much less mad about the dilution now that they didn't get in, because I would have been steaming if they did.
Well, why would you be upset about the dilution if they got in?
Just because they could have raised either more money for the same amount of shares or same amount of money for much less shares.
Yeah, no, I get that.
So that's it. But do you guys think, what's the % chance that you think that we get in the next 4 rebalances? So over the next 12 months, What's the chance that SoFi gets in?
95%.
95%.
All 95s, 90s. All right. I like that rate. And I would say something similar.
I mean, I said this with Roy in the bootleg. I thought 20% December, 50% March, 70% by summer, and I think like 95% by September.
Yeah, I think Reddit deserves to be in as well. I think Cheniere also deserves to be in LNG.
Yeah.
There's a lot of companies, but also there's however many, like 180, nearly 200 companies that are not even eligible anymore. So everyone's like debating on which of the 7 companies should be in. They should all be in. Like, I'd pick those 7 companies over the $7 billion businesses that are dying and losing, like not even profitable anymore. There's a lot of names that need to go.
What's the biggest? Do we know the biggest rebalance at one, like on one rebalancing period? How many companies have changed hands? Is it 5 at a time? 5 adds, 5 deletes, or?
I don't know. That's something Steven's brain could remember.
Say it again.
How many is the biggest amount of rebalances in one?
Yeah, in one period.
Oh,
Yeah,
I have no idea. Ask ChatGPT. I have no idea.
Yeah, because like this time was +3, -3, but I'm pretty sure I've seen like +5, -5 before.
Yeah, I've seen 5 before. I'm sure there's probably more than 5 at some point, but
yeah, they don't always pick 3. It's not 3. Like sometimes it's none.
1. Yeah,
like
once this year it's been none.
Yeah, that was the third quarter last time.
That was the most ridiculous thing. Like sometimes they'll pick a name where you're like, okay, that's way less deserving than like 5 on this list. But when they literally just say, hey, we're good, we're standing pat, and you look at the companies that are in and the companies that are on the outside of this, you're like, okay, what's wrong with you?
Michael Burry said 1% for SoFi to get into the S&P. He was even commenting on it. I'm surprised by.
Maybe it'll be his next short.
Why would you even say that?
Because I think it would be hilarious. That's why.
Because he only shorts good companies. Is that why?
He'll lose his shirt.
He is. I don't know. He's all over the place as far as what he's shorting and why. Like, especially Nvidia. Like, what is he doing? And it just the worst arguments where you're like, okay, if these arguments are true, then short the actual target, not Nvidia. I don't know. His Palantir stuff is all over the place. It's weird. I get the valuation, but he's basically pulling up bull arguments that might have possibly been true if you squinted hard enough in 2023 and certainly aren't anymore. So, if you pick SoFi, I'll be like, it's kind of, I feel almost like, not that he got lucky. I think very deserved on everything that he got, so far. Like he's brilliant, but that doesn't mean that you're brilliant across the board. And this can happen. Like you'll oftentimes see in athletics where there'll be some guy that's or gal that's a tremendous athlete, very successful, and then that goes to their head. They think that they're great at everything, and so they get into a lot of verticals that they have absolutely no talent and ability, and then they just struggle. So I think that at least with tech, Michael Burry doesn't seem like he understands tech at all.
Bro, we have so much to talk about, Roy, on Tuesday with Netflix and Paramount, and then a SpaceX IPO in 26, Anthropic IPO in 26, OpenAI IPO in 26, and all the other news that's been going on over the past 48 hours. It's like
OpenAI IPO in 2026.
Well, I mean, they're racing Anthropic to go public, and they already floated. Like we already saw headlines around the potential valuation and the fact that they want to be public, and we know that they're like super starved for liquidity, and I wouldn't be surprised if they're planning a 2026 IPO at all. It's actually baseline assumption in my mind.
Yeah, they'll need to at some point. It just they have to raise a lot of capital. So,
dude, if I was losing market share like OpenAI is losing market share, I would be desperate to go public as soon as possible.
How does this make sense? 27 rebalances a year? That doesn't make any sense.
He means companies, like total.
Yeah, but still, do the math. Like there's 4 rebalances.
Yeah, but think about the companies leaving also.
Yeah, he might be meaning also the mergers and acquisitions that happen. I think there's 3
still,
or 4.
That's a lot, guys.
He
That's
could
like
also be talking about the S&P 400 and 600.
You're right. that.
No, because there were, when you include those, there was like 12 or 13 companies today. It's probably companies going in and companies going out. If 3 companies went in today, that means that there were 6 rebalances because 3 companies went out. Then multiply that by 4, you get around the 27. So if you have an average of 4 and 3, it's right there.
Half of that would make a lot of sense. If you were to say 14 or so, 13, 14 companies a year end up rebalancing on average, that makes sense. And I think SoFi is in that list. The top 13, 14 companies, especially after this dilution, they're only going to grow faster. Like, think about how much their book value just ended up growing. And then plus 4 more quarter prints on top of what we've just seen. Like,
so okay, so you said, what's the odds that we would give SoFi in the next year? And we all sort of said 95%, but said differently, on average, 13, like, let's go up to 27. You divide by 2, 13 additions, 13 deletions, roughly. Over the next 12 months, of the 13 companies to be added, what is the likelihood that SoFi is one of 13? And I think, it's incredibly likely.
Like, if you've seen those lists going around of the top companies to be put in, SoFi's on all of those lists, and they're only going to grow. Like,
yeah. I mean, you could have other companies being eligible from now until then and skip the line.
I don't have an unbiased opinion of SoFi. I only have my biased opinion. I can't give you something I don't have. But
he's right, though. Like, all of us tried to be as impartial as we can be on some things, but admitting our bias. But no, like, I'm probably like the SoFi community oftentimes sees me as a bear, but no, Tanner's absolutely right that if you're going to look at eligible names, there's maybe 10 that look super compelling and attractive, and SoFi is at least middle of the pack there, at least.
And one of them just got entered.
Yeah.
So Carvana is no longer on that list. Yeah.
The stock comment. All those lists were made by Stock.
They weren't made by Stocko. They were made by Mumu.
Yeah, no, well, I don't know. I think Stocko was the only one that I saw the latest one with Reddit, and
No, I think they're made by Mumu. But he's been taking those graphics.
Dude, I just don't like whenever you guys, whenever the SoFi community says breaking and it's like something completely that's not breaking in the slightest, it just irritates me a little bit. Like, breaking, SoFi is going to be in the S&P in December. Really? That's breaking.
So I did end up using that, ironically, in my most recent video, which is on SoFi, and the title of the video begins "Breaking," but it's with the dilution. So it really was breaking. It was right around like maybe an hour after it was announced. So, but it's hilarious. See that you're calling me out. No, I'm just kidding. I know.
Dude, I did breaking too, but that was breaking news.
It was absolutely breaking news, yeah, and big news. So.
I was driving at the time, and my girlfriend had to try to read the press release, and she was not understanding. And then she's like going through tweets, and she's like, SoFi is down 5% AH, and then I'm like, AH, what the heck? And I was like, oh, after hour. Her translation of it, like, very funny.
It's I'm not calling you guys, and I love Stocko, but if you go on his profile, I think every single one of his tweets says breaking news, like every single one, and it's just kind of funny.
I've got nothing bad to say about the GOAT.
I have nothing bad to say about the GOAT. It's just content, man. I said,
yeah,
like, I make some content that seems really aggressive in the thumbnail and the title, and then it's just like
totally he would admit he's aggressive with the titles and the thumbnails, but if you actually talk about him as a person, and he's a gem.
Oh, so yeah. Good guy.
Yeah. Yeah, we're all on the same team. We're all on the SoFi team, ladies and gentlemen.
Yeah. And it's okay to have different approaches too. That it, like, I call Stock Goat like a cheerleader, but I'm not meaning it in a disrespectful or bad thing. It's just that he's kind of a permeable as it relates to SoFi, with a few rare exceptions. And it's nice to have that sometimes, because there are times, and we've been through this with SoFi investors, where the company is doing a lot of great things. So if you look at what they're actually putting up, it's very good, and the stock price is just not appreciating at all. And so you do a lot of due diligence and research and look at the direction the company is going, and that's very important. But it's also nice to have, when in times when the stock has not performed like you expected, to have somebody out there just saying, "We got this team," and that's why I like the stock out there.
Dude, so if I bought him that nice red sports car, I'd be a perma bull too. Like it's, you make money on a stock, you're obviously going to cheerlead for the stock. That applies to all of us.
I mean, dude, you'd have to sell what percentage of your portfolio to go buy yourself a nice red car? I mean, you're the richest guy here.
I mean, what car do you buy?
I think a red,
whatever one he wants, Steve, in whatever color he wants.
I'm just asking you a question.
A red Corvette convertible off his SoFi shares, or options, because he does a lot of those.
Do you know what type of Corvette or not?
Yeah, man. Because let me just.
I don't know. I'm asking a question.
Our stock go.
I don't know Corvettes very well, but I think that one is called a C8. If I'm
okay,
is that a model?
He's asking
Here's the
ChatGPT
model,
right now
yeah.
what it costs.
No, dude, I'm pretty sure I know what. That's one of their newer models. That looks really sporty. But
Hey, man, if you can't buy a Corvette off your SoFi gains, why have you been talking about the company for 4 years? That's all I'm saying.
yeah, the new model is a C8. Yeah, I remember that was like big news because everyone thought it looked more like a Ferrari.
Yeah, Palantir and Robinhood bought us not one but two Teslas. So
There you go.
nice.
There you go.
It's the beauty of investing, right? You put away your money today. You don't get to spend it. You don't get to buy nice things today. But if you bet right and you bet correctly, you could buy a lot more into the future. You can support your family, buy nice things. You can splurge.
Dude, it really is like a tale of two cities, right? Like Stocko talks about SoFi nonstop, and his reward is a red sports car. Chris talks about SoFi nonstop, and his reward is a freaking job. Like to each their own, I guess. The root cause is the same for both.
Yeah, crazy. It would literally, I think that's a dream job for Chris. And not enough people in this world have their dream job. So congrats to Chris again as we wrap up. Let's jump into the after hours.
Yeah, sounds good.
Are you making the link or am I making the link?
You're making the link, Stevie.
Steve.
This guy.
Well, no, Tanner can make the link. But he's got
No. I'm just saying.
No.
You don't even let me sign off. You want to have this fight live. That's what you want to do. You want everyone to know that I suck at sending out the links and the things. You couldn't have waited till I hit end stream and then say, okay, I'll set up the link. You needed everyone to know I'm terrible at it.
I think everybody knew that you're late on the links. Everybody knew.
You're late to go live. You're late to post the links. Yeah.
I wish the after hours was late, or was live.
It is late, thanks to Tanner.
No, but the after hours can't be live. There is members only live streams, but not whenever you're cross streaming. We can't all individually set up together an after hours live stream. So that's the reason why it's not. So until that changes, maybe one day it will be live, but for now it'll be uploaded tomorrow around noon. People sending me DMs at 12:05. Where the heck is it's coming?
We should actually try it, Tanner, because I was reading up on StreamYard how to do a members live stream, and basically you create a video and you post it as unlisted, and then you go into your YouTube studio, and then that's where you turn it on for members only. I wonder if we make the live stream as unlisted, and then we each go into our YouTube studio and make it as members, whether we can have one stream into 4 places.
That could be interesting.
We could try it. I mean,
yeah. Do you want to try it tonight?
We could. I mean, I don't know.
We're gonna try it next next week. Why don't you guys or we'll do something this week to test it out first.
Let's just try it tonight. We have members already in here, and if it doesn't work, then it's going to be a recording that's going to be posted tomorrow.
Yeah,
Okay.
that's fair.
Well, we still have to end this one, right?
Yep.
We have to end this one, so we're going to make one that's unlisted, and then we're going to do it as in our YouTube studio as members only live.
That means, ladies and gentlemen, like people are saying now, right now, well, you have to be a member only, Tommy. So
yeah, you guys have to be members of the channel to actually watch it.
Not subscribers, members, which means you got to hit the join button down below if you want to join. But thank you all so much for watching. Really do appreciate your time.
Oh, and by the way, if you don't see it pop up live after like 10 minutes, just assume it didn't work, and we're going to post it tomorrow.
And then go to bed.
Yes.
Bye for now.
Later.